Ladies and gentlemen, we got Covey tonight on the mic. We're going to be going over a watch list for base breakouts. I'm sure we're going to see some trend breakouts in there as well. We're going to let him step up to the plate. I'll interject from time to time so that way we can dive a little deeper. But remember, if you're watching this now on YouTube and you're seeing this just before market open, well, congratulations. You have just enough time to get yourself set up, get yourself started. So, Covey, why don't you take the ropes, take the reins, I should say. Right. Take the ropes, take the reins. And it's all you, brother.
Okay, thanks, Dave. So, I'll just introduce myself. My name's Adam, actually, and but my nickname's Kobe. I met Dave about a couple months back, and we just started trading together, and we meshed really well. So, anyways, let's jump right into it. So, I kind of want to just say this is open mic. Anybody, if you have any questions, blare it out at whenever you have a question. Like, I want to help you succeed. And even you asking questions will test me. So ask away. So I'll just start with the market. So basically my strategy are base breakouts. I only focus on really the base breakouts. Occasionally I'll play EPs or trend breaks, but it's majority of the time it's base breakouts. Now, the reason I want to bring up the market is my strategy only works in a bull market. It doesn't work when you have this going on over here. You remember this 2021 to 2023 bear market?
Oh, yeah.
Base breakouts just do not work. So this is where you want to be doing all your trading. And yeah. So we'll start with, first thing I kind of want to start with is positions I've taken in the last month, just so you kind of get an idea of what I'm looking at when I'm taking a stock. So we'll start with the losers, because losers are as important as winners because they teach you a lot more. So we'll start with ARQ here. So ARQ, this is kind of the simple setup here. So you have this stock here. Now the first thing I look for is the RS rating. So the RS rating is relative strength towards the overall market. So the S&P 500. Now, I like to only trade when the RS rating is 90 and above. If you guys have any questions about RS, feel free to ask at any time, and I can go into more detail. But pretty much the gist of it is you have this stock in a stage one. This is going back to Dave explaining about the stage analysis. So this is stage one, and then you have this big push up into the start of its stage two. So it starts at stage two, and then you have your basing period right here. So you have a stage two, push up, and then you start to base out here. So what I'm looking for is this push up and then base out, and then you find what I look for is these area of resistance. So in ARQ, for example, you have this area resistance at this $8 level. So you have multiple areas it tries to cross, but just has trouble crossing. So for example, you have 1, 2, 3, 4, 5, 6, 7, 8, 9 times it tried to cross the $8 area, and it couldn't get across. So I ended up taking this a little bit prematurely at this day right here on Friday the May 3rd. And yeah, it just the thing that why it didn't work out is on breakouts you want to see volume coming into the stock. Now the volume dry up here, as you can see, let me just blow this up. So the volume dry up here on these days is really good. You want to see volume getting sucked up out of the market as it's getting tight. So you see how tight it gets here? It's getting tighter and tighter and tighter as the volume decreases. So that's just your basic supply and demand. So there's no supply coming in the market. So that means if any little bit of buying volume comes into this, it will push the stock up with very little buying demand, if that makes sense. And so, but I bought this prematurely because I bought it on a breakout that didn't have any volume. And you can see it failed. I got stopped out and move on to the next. And the other important thing here to watch too is stops are very important, because look at this thing. I could have been down, instead of only being down 4%, I could have been down, where is it trading at now? 10% if I held. So Stops, risk management, super important. Yeah, so that's just one of my losers. I'll go over a pretty good winner now. This is a really good example of in my opinion, a textbook base breakout. So you have ship here. So ship, you have this stage one, right? Then you have this push up, a base here. Then you have another push up, and then you have a base here. So the reason I didn't trade it in this base because it never really got tight. It just pushed up. So I waited for this. It got super tight here. And do you guys see, like, you have this move up and you have this tightness coming in. And then the big thing to look at too here is the volume. You have throughout this whole consolidation, you have below average volume traded on multiple days. And then right when this breakout occurred, look at this volume line. Just shot right up, and this thing moved 6% in that day on this breakout, and I took it right on this day. And then so that is just kind of the setup of a textbook base breakout right there. You have this move up, you have a base in a stage 2 uptrend, and then you have a breakout. Is there any questions?
Yeah, could you go over the RS on that as well?
The RS, yeah. Like, what do you mean? Just like
The fact that it
RS.
was a high RS, and then the fact that it was a hot sector, obviously.
Oh, okay, yeah. So during the time so this thing had a RS of 98, and the reason this base breakout was so successful was because ship was in the transportation and shipping industry, and at the time this was, well, it's still a hot sector. So you really want to focus on base breakouts in a hot sector. Thanks for bringing that up, Dave. Base breakouts in the hot sector will give you the best chance of trades exceeding and having these multi-R runs. Like I made 9R on this. So whatever I risk, let's say it's $100 times that by 9, you get the point. But sorry, I didn't make $900. I took profit on the way up. So it was a little less than 9R, but that's the point behind it. Any questions before I move on? I'll move on to a couple more of these examples, and
I think
Yeah,
that was
you say profit going up.
okay. So profit going up. So what I mean is the first thing I'll do is if a stock, I really like the stock and it's in the hot sector, I'll take profit at 2R. Most of the time, if the market's like bad or it's not running or the stock is like a biotech, I'll take profit at 1R, which is selling half my position.
when you
So
say
on this one,
1R and 2R, sorry to interrupt, but when you say 1R and 2R,
yeah.
can you explain to us what you mean by that?
Okay, so 1R is pretty much one of your risk. So let's say I'm risking $100 here. If it goes up here, I'm selling half my position, so I'm locking in $100. And then if it goes up 2R and I sell half my position, I'm locking in $200. But if it comes back down and stops me out, I'm on my other half. I'm locking in $100 because I made R. So I sold I sold half up here, and then I sold another half down here. So that means it would balance out and be 1R. That's just kind of the simple math behind it. Does that make sense?
Absolutely. Yeah, that makes sense. I like that.
Okay, perfect. All right, so I'll go into a couple more examples just so you guys get a good idea of what I'm looking at. So we have CRDL, same sort of thing. You got this push up, and then you have this base being formed. This is a big base being formed. So the thing I really like about this is kind of a Mark Minervini VCP. VCP is voluntary contraction pattern. This basically happens when you have a big contraction here, a smaller contraction here, smaller contraction here, and then a really small contraction here, and then you have the breakout. So this is what I really like to see, you have this push up, you got this base contracting, getting tighter and tighter. And then you see here, right before it breaks out, same thing. No volume coming in this stock at all. Supply is getting sucked out of the stock. So on this day, when a buying demand comes in, it pushes it up and breaks out. So that is just another, it's just rinse and repeat. I got another one. So you have CENX. CNX, same sort of thing. You have this push up, you got a base, you have actually a shakeout here, which is I like to see, because if it comes down and then gets bought right back up into this base, I find that very bullish. You're getting a lot of weak sellers out or weak holders, and people who want to see the stock go up are holding this. So it's the exact same setup. You have push up, tightening up, and then same sort of thing. Right when the break happens, no volume for the past like 3 or 4 days, and then on the breakout you have volume coming in the stock. And the other thing to mention is same area resistance. I forgot to go over that the last stock, but you have an area resistance around this 1834 area. So it touches this area 1, 2, 3, 4, and then breaks out right here on volume the 5th time.
I got a couple questions for you for
Yeah,
CENX. I was kind of typing to Nilish. He had a question about SHIP,
yeah, I
but
see
I think,
that.
yeah. So, but you did end up taking the rest of your money out on SHIP after
Yeah, we
your,
go back.
sure, yeah. So after the ADR was
Yeah.
twice the height of the 10-day moving average, right?
So yeah, so the reason I took, so let me explain the whole process of the selling.
Please.
Because I've been kind of just doing the setup. So selling, this one sold a half at 2R. Then I sold another quarter on this day, right at end of day before earnings, because earnings is a gamble. Like Dave is correct. It's completely a gamble. The only way I hold into earnings is if I have a buffer. So I only have, it's usually around 2R my risk. If I have a 2R risk buffer, which is this, I will hold into earnings. So earnings, I was holding a quarter into earnings, shit the bed here, then it came back up, and I'm trying this new strategy to lock in profits, but when the stock gets 3 times its ADR extended from the 10-day, I'm selling everything. I'm getting out of the stock because I'm I don't have firm enough like study yet, but most of the stocks that I've been trading in these base breakouts that get extended 3 times their ADR are likely to get a pullback. So when I looked at this and it was around 15% its ADR, I sold. So right around here, I sold the last quarter. And look at that, it pulled back. Now, that's just own rule for me, and it's still in the study phase, but I just like it because it
This
gives you an
is
idea.
This
Yeah,
is something that Adam and I argued on because what we preach to everybody and what we try to preach to ourselves is that we want to play it through that 10-day because we are momentum traders. And
yeah,
because it didn't break that 10-day moving average, I disagreed with Adam on this. Now, this is his trade. It's how he's going to trade, which is totally fine. But
mm-hmm.
this is why we have this community because I'm going to question the things that he does as well as he's going to question the things that I do. So why did he do this? We've talked about this ADR percentage being above the 10-day and how it does usually have a pullback. But in hindsight now, after he had sold
Yeah,
off that top green candle, it was a beautiful sell. Now it's starting to set up a trend break. So it's hard
yeah,
for me to argue with Adam when he's so well right. But obviously, this is in hindsight. Now, if this being in a hot sector, it broke the base and he held through that the earnings gamble, it kind of irritated me a little bit that he would sell. So if you went through all of this issue, why are you selling when you could still hold on to this beautiful stock? Now, this
yeah,
is hindsight. This does look good. And, kudos to you for locking in those gains. And hopefully it sets up again for us so we can
yeah,
continue to play this stock because it is in play. It is in a hot sector. But we do want to bring that up, that we kind of, that's the whole reason why we have this community, because it's like, but why did you do that? And that's why he said it's kind of a new strategy that he's doing. He wanted to lock in those profits. He knew he had done what he had did, but it's not ideal for us to sell something before it breaks that 10-day moving average. So
Exactly. Yeah. Yeah. It's like I said, like Dave said, new strategy, and just seeing how it works with different stocks, and just doing an overall study when stuff gets extended.
Back to
So we could go.
CENX. Can I ask you a question about this now?
Yeah. Yeah.
So we obviously got into this, and
Mm-hmm.
we sold, and this is the whole reason why we have this, guys. Why we take profits after 2R. We want to pay ourselves so that way, even if we are wrong on the stock, we don't lose on the stock. So Adam went
Yep.
over a little bit, but we got in on that first base breakout. We made our money on it after 2R, and the last piece came back down and stopped us out for break even. Now you can see again it's starting to set up. And one of my questions were with you, and I'm sorry if I did not catch on it, but are you willing to get back into this? Is this still on your watch list, or are you still holding on to this?
So I am. Yeah. This is exactly what I'm looking for right now, because you have this breakout here. And yeah, this is on my buy watch list. And if it breaks this area, 1852 again, 42, the previous breakout area, I will put a position on, because you have this breakout, and then you have this pullback, and you got this retest here. And Dave loves the retests.
Yes,
And
sir.
then you have it on this pullback on lower volume too, these 2 days, which shows that same thing, supply and demand. And then you have this push, and then if we could see it push out again on volume, yes, this would be looking like a really good trade, a really good pullback buy. And I'm that's why I have it alerted here if it breaks the high of this day. So
What do you
yeah,
have your alert set at?
1842. That's kind of the area resistance. So same sort of play. Yeah, 1842. Now, the question I also kind of got a ton of is, let's see if I can find a good example here. So, is how do you tell if volume's coming into the stock when you're breaking out? So, I've gotten this a couple times, but let's use RNA for example. So, just quick run through. You have this push up, you got this base being formed, it gets tighter, higher lows. It touches this area resistance multiple times, and then you have this breakout. But how do you tell this is a breakout before it actually breaks out? So let's see if I can find it here. Let me go to, so it's Tuesday the 14th. Tuesday the 14th. Okay. So RNA right here. So this date right here, this is right in the morning. This is where I bought it. You see on the 5-minute, this is the only time I use a 5-minute. Most of my trading is on the daily, but on the 5-minute, you see this above average volume coming in right at the market open. And it breaks out of this area resistance on volume on the 5-minute. That's how I tell, okay, there's volume coming into the market, coming into the stock on the 5-minute. It breaks out of this area on volume, and then you have this big volume candle, and then you have this retest, and then it rips. So this is kind of what I'm looking for, this breakout area on volume on the 5-minute. And that's the only time I'll use any 5-minute indicator for my base breakout strategy. Is there any questions with that? Not, I'll move on to
I like that. It's
Watchlist.
pretty clear as day when you're seeing that volume come in on that 5-minute. It's kind of a big blurb. And a lot of times, guys, when you get that big blurb, the best strategies are going to take off. They're going to take off, and they're going to take off quick. Adam and I have been sitting in the trading room together before, and it does this big blurb, and we put a buy bid in, and it never comes back and fills us. And it just skyrockets to the north side, and we watch it leave without us because we don't want to chase. But a lot of the times too, and just like an RNA, when you looked at that 5-minute, it popped up and then it came right back down. It retested that same area and it got bought right back up and then headed higher.
Yeah.
Yeah, right there. You can see how it popped up right there, right in the market open, and then it came right back down. It retested that area and the third bar after, and then boom,
Yep.
took off. So you have to be patient with it, but at the same time, if you can find a good risk multiple there at the bottom, you got to run with it. So no, don't be shy on that.
Yep.
But yeah, great explanation. Thank you, Adam.
Yeah, no problem.
Can you
Any,
show us ship again?
pardon?
Ship again.
Ship? Yeah.
Explain how that's going to be what needs to happen for that to be a
So
trend
with
reversal.
ship is first thing I want to see it do is touch one of these moving averages, find support on one of these moving averages, preferably the 10-day, because as you could see previously in this base, it found support on the 10-day. And then what I would like to see happen is find support and then kind of work its way. As soon as it finds support, work its way higher. Like you got candles coming up, and then forming an area resistance around these highs, and then you have it touch, and then you have it come down and get tight, and then now this is really bad drawing, sorry guys, but then you have this breakout right here. It's kind of so this needs for my strategy and my look, it would need probably, I would say probably a week, maybe 2.
Now,
Really
on my
depends
end
on
of
it.
the strategy, you can draw a trend line right from the top of that, right down to the 10-day moving average, and you'll see that there's a trend there. It looks better on the hourly, Adam, if you don't mind throwing it on the hourly. And you'll see that there's a trend break strategy within that right there as well, if you don't mind. See that? We can pull it from the top and bring it, right down. Yeah, you know what to do. Boom.
Yeah.
And boom. And I would even pull it down. That bottom one, I'd even pull it down. Yeah, and minus that wick there. And then I already have my alert set to just above that trend break. And you guys don't worry about those moving averages because on the hourly it changes everything. Those moving averages are only supposed to be on the daily. So when it breaks that trend there, I might get in a piece, hold on to that, and then add to it when it breaks the base breakout if it forms one. So there's multiple ways to play this, and that's why we have this community, so we can share these ideas. So
yeah. All right. Yeah. That's a good trend break. Like I said, I don't really play the hourly or the 5-minute trend breaks, but Dave's the pro at that, and I like the slower stuff. So so now I'm gonna kind of run through my watch list, or actually I'll run through what I'm holding right now. I only have 2 positions on. So I have ENV. So ENV was kind of this. You'll notice with what I'm showing you guys, it's the same exact thing. It's just the same thing over and over again. So you got the stage 1, then you have the stage 2, all the way up, and then you have a base here. This is a base, but then you have an even tighter base here, and then you have a breakout on volume. It's the same thing over and over again. You have this stage 1, then you have your stage 2 right here, and then you have this breakout. Now on volume. So this is a great example of a 5-minute coming into play. So look at this. Right on the break here, right above that area resistance. Look at this volume that came in on the 5-minute. Huge amount of volume. Now the only thing that it's most likely that this breakout's going to fail is because throughout the day, it just soaked right back in. Now, I have a rule where once I put on a trade, it either stops me out or you either get a profit on it. I don't mess with the trade as soon as I put it on because it actually hurts me more than it does any good. Like I'll show you an example. Actually, I'll show you right now. So ESPN, Dave was talking about this. I actually got in this, and I was like, I don't really like the setup. It looks a little extended from the 10-day, even though it wasn't. This was a really good looking setup. Nice flag here. But I got in it here, and I sold it right down here because I was like, I think this thing's gonna go lower, and now you see it, right? So a rule for me is I don't mess with the trade until I either get stopped out or I take my profits, like my 2R and my 1R and stuff like that. So just something to stay aware of. And then we have flex. So Dave went over flex yesterday, but beautiful uh beautiful breakout here. Like really, really nice to see. Now the only thing is we kind of got in a little early on this day. As you can see, there wasn't a ton of volume. Like there was actually below average volume on this day. Now it did peak above this area resistance, this 29.77 area, and that's why you have like you stops and you set your stop at the low of day. This thing came within like 1 or 2 cents of stopping me out.
Yeah.
Yeah, hit right off the 10-day, and then look at it now. Now it's a phenomenal gainer. Now this day right here, this was the breakout day right here. This was the breakout day. So, but like I said, I just went for the more earlier breakout, but this was the breakout, the true breakout right here. So these are the two positions I'm holding. We'll see what happens. I have locked in gains on flex. I sold half my flex at 2R. So around the 3080 level, and now I'm holding the remainder of my shares. Now, yeah. So is there any questions before I move in the watch list? And I'll just run through that real quick, and then we can have an open floor, whatever you guys want.
Are you going to do the remove? Are you going to remove any more shares if it gets any further extended from the 10-day, or are you going to hold on to this one till close below the 10-day?
So it actually on Friday, it actually went triple its ADR above its 10-day. Actually, no, it was almost triple its ADR above the 10-day. If it does, I'll probably sell a quarter of my position and lock in some gains with that, because like I said, I want to try this. I'm trying to put together a little study to see if triple the ADR, how many times it's a pullback, if it pulls back more than 50%. And this will all determine on like gain base too. So if you have a stock that's triple its ADR and it like rips, that will also come into the factor too, which one's going to be more profitable in the long term. So I'm just throwing together. It's really early, but that's how these studies and like going into the books and looking back at previous stocks and critiquing your strategy is how you're going to become a really good trader and a very profitable trader. But yeah, that's kind of the
ADR.
Pardon?
What is an ADR?
What is an ADR?
You keep saying ADR. What is that?
Oh, okay, sorry. So the ADR, for anyone who doesn't know, it's the average daily range. So it's on average, this stock moves, if you see it in the top, it moves 3.29%. So on average, the stock will move 3.2% to 3.29% in a day. So it will move, yeah, if that makes sense. It will move 3.2% on average within a day. Now, some days it doesn't. Like this day, it only moved 0.3%, and on this day it moved 5%. So it's just the average in the past 50 days. So that's just the ADR for you.
If I could just interject for a second, you guys need to understand that percentages are true as to where dollar amounts can mean anything. So if I say I've made $100 in my account, that means nothing to anybody. But if I say I made 10% in my account, everybody can relate no matter how much money you have in your account. And the same goes for stocks. On the X, we have the dollar amount. The Y is the time. The X, if we say it's moved up $1, that could be enormous for a stock that was down, or that doesn't move that much. So like if it moves up $1 and it's moving 10% ADR, that means it's a fast mover if it's moved up $1. But if the stock is a slower mover and it's moved up $1, it's just, if you speak in ADRs or in percentage multiples, it gives us a finite way to measure how fast something moves. We try to find things that are 4 and over. Now, it's okay if you have a really, really good, base breakout like we're looking at here. It's okay to take something a little slower, but we usually don't take anything lower than 3. We try to find things above 4%. And you can, if you're using TraderView, you can add this to your studies at the top there. But
Yep.
we always want to try and talk in percentage multiples. And if you guys need help with that, there's ways to do that. Just look it up on YouTube, how to convert, and learn your multiples in percentages.
If I could chime in real quickly, some brokers like Fidelity do not use ADR; they use ATR,
Yeah.
and it is slightly different. So, if that ends up being the case to your broker, either get the free copy of Trader View here, so you get ADR,
Yep.
or get with me and I'll show you what I do to kind of compensate for it. Although most of the time now I just go to Trading View.
Yep. Perfect. All right. Any other questions?
Give
If
me
not,
the
I'll-
watch list.
I'll run through the watch list.
Let's do this, baby. I'm pumped.
Buddy,
Wait, sorry. Okay, sorry. Switching around. So first one we have here is CELH. So same sort of thing. You have this run up here. So you had a base here. Actually, first let's zoom out. So you have the stage 2. You can tell. Good thing to tell as well if you're not using RS is the 200-day. If the 200-day is sloping up, it's a good chance that this thing is in a stage 2 uptrend. It's using the 200-day. So stage 2, now you have this push up here. You have a pullback right here. And what does this look like? This looks like a cup and handle. So now I haven't in the previous examples
Hey,
I
your
haven't really
phone's out there on
mentioned a
the
cup
counter,
and
right?
handle, but the only thing
out there with
different
David
about
on
it
the
is it's just not like you have contractions where it's like 20% and then you have 10% and then you have 6%. It's more just you have this big base here and then you find an area resistance at all-time highs or around highs, and then you form a handle here and a tight, and this is where you want it to get tight right here. So CELH, I'm looking for, if it breaks out here, I'll probably put on a position, but I always say I want 1 more day, 1 or 2 more days. But this is looking really, really good right now because it's a 6 ADR. So if you can follow my screen, it's a 6 ADR, and it's really, really tight to the 10-day and right at this all-time high area. So if it breaks out, like I showed you, if it hits my alert, I go to my 5-minute. I'm like, okay, I look for the volume here. If I see big volume coming in, breaking out of that area resistance, I will enter this trade. Now, if I don't see the volume and it hits my alert, then I won't, because the probability of it continuing, especially around this area of resistance, is unlikely. It gives you less probability of this trade being successful. So
Guys,
yeah, CLH.
Hang on, before you leave CELH, I really want to talk about this because this is the William O'Neill's cup and handle strategy, guys. This does have amazing earnings. It does have great earnings per share. They've been doing this for a while now, and if you look around you, I don't know where you guys are at, but where I'm at, CELH is kind of like this prominent, feel good energy drink. No additives. It's not bad. You can drink these at the gym and not look silly. Like, they have everybody fooled. It's just another energy drink. The stocks, you can't. I mean, people are drinking these up, and the kids are drinking these up too. I see them at track meets and stuff. It's definitely one of those that you need to keep on your watch list. If this breaks out of this William O'Neill's cup and handle strategy with the RS rating of 90, is that 3 or 5? I think it's 93.
98.
This can be very powerful. And also, CELH used to be a very, very slow mover. A very slow mover, okay? So now that it's around a 6 ADR, it's really starting to pick up speed. And if you go back and study Monster back in the day, you'll see multiple cup and handles on Monster as well. So you can go back and study that if you want to too. But CELH is definitely a nice one. This isn't just a This just isn't your regular trade here. If this thing breaks out of this cup and handle, this thing can be very, very powerful.
Perfect.
What level are you calling a resistance?
Where my alert is 95, 93. So for holy diver's sake, we could probably call it 96, just
That's
round
right.
number.
That's right.
But yeah,
9601. Okay.
96 area, I'd call
Yeah, I see that.
it. Then we have pub M. So pub M, just same thing, guys. You have this push up, and then you have this base, and you got resistance being formed at this 2420 area, and you have this higher lows. It's getting tighter and tighter. It's had trouble crossing this area, and now I need like 3 days in here though. It's still very, very loose in my opinion compared to the ADR. But I would like to see maybe 1 or 2 days inside this range, and hopefully we get it. WDC, this is my top watch. I really like this. This is a classic VCP pattern. You have this run up here, and then you have this base being formed. You have VCP being formed. It's getting tighter and tighter and tighter, and then you have higher lows, area resistance at the 75-63 area, and it's just the same thing, guys. Rinse and repeat over and over again. And sorry, I forgot to mention, but look at this volume dry up. You have like dry up, almost no volume traded this day. So tomorrow this thing could go because there's no supply coming in this month. No supply coming in this stock. And any little demand could push this thing to the upside. ETRN. Now, ETRN, I was a little hesitant throwing this on here, but it is forming a nice base. It is forming that BCP pattern, this higher low. Same thing. You have this push up. Now, the only thing I don't like is this big volume day here. Now, Dave likes to call it a volume anomaly, but to be honest, I don't even really know what that is. I just like the setup, and I'm just watching it. It's not my top trade. It's not because of this day, because of this push up and then suck back, but we'll see what happens on this day. But yeah, so ETRN, we'll look at that. Then we have Ever. Ever, same thing. You have Ever, actually, I missed Ever on the base breakout. So what was funny about it is I bought it on this day right here. I bought it this day. This was a loser for me. You see volume dry up, very tight, same sort of setup. Broke out here on volume. Then it came and sold, and I got stopped out. But then this is why you don't completely forget about these guys. It's because this thing set up again. This was when the market was pulling back. You remember that pullback we had? This is when we pulled back. This thing barely pulled back. Had touched this area resistance, pulled back again, touched this again, pulled back, touched it again on almost no volume, and then same thing, boom, broke out on volume, and then it ripped up to the north side. And then you have the same thing. You have another base setting up here, higher lows being formed. You have volume dry up coming into the stock. It's the same. It's the same exact setup over and over again. Base breakouts, same exact thing. Now you have Spotify. Familiar name. It's a slower mover, but I do like the base breakout because it is a bigger base and it's RS rating at 98. And look at this thing just carried up. This is actually the first time, other than back here, it's formed a decently tradable base. So if we could see this thing, if the market continues to rip and we could see this thing break out of this area at 310, then I'll probably take it because yeah, it's the same setup over and over again. And then I'll just flip through these. These are kind of just stuff that needs to set up. So you have
Excuse
EU.
me, Adam. Sorry, buddy. Can you go back to SPOT and where are you saying the base breakout is one more time? Looks a little different on my chart. That's why I'm just curious. Did you say 308.10?
310.
310. Okay, so 310 psychological, and it's oh, I see from back end. I like it. That's nice. I like the higher lows being formed on that too. It's starting to get a little tighter. Yeah. That's very nice. All right, thank you.
Yeah. Yeah, no problem, brother.
What do you mean by psychological?
It's just
The even numbers.
yeah, it's just even numbers like 310.
Referred to as big fat round numbers.
Yeah, big fat
That's
round
right.
numbers. We could do it like I have it marked out at 310.67, but I'll just use 310. And yeah, my alert. I'll actually set my alert right now at 310. But yeah, it's just psychological. So then we have EU. EU's actually, I really like EU because it's all-time highs here. Like very little supply traded back over here, and then you have it touching this five. This is a $5 area that's holding on multiple occasions. Like this thing cannot get across $5 now, and it's forming these higher lows, and it's a huge base. Yeah, so just watch that one. I have ETI. Shout out Dan for that one. I really like the way it's setting up again. It just needs to hold this 21 and build out a little bit more. OCGN, faster mover, health technology, needs to build out its handle. CRBP, I like it because it ran up to all-time highs and literally rammed its nose right into it and then sold off, and now it's forming higher lows. So it's just the same. It's the same thing over and over. And you have BLND. You have this run up, big base being formed. It's really sloppy right now, so I need to see it tighten up. But yeah, BLND. You have AVGO. AVGO rammed right into these all-time highs, sold off, now forming a tight little base here, forming these higher lows. SLQT. This is a faster mover. Now, this is a little bit different because it's a shorter base, but it's still forming these higher lows. Hit the 10-day, bounced off the 10-day, and now forming a really nice tight base here. Now, the only thing I want to see here is the volume drop. It is getting some volume drop, but I'm hoping for like 1 or 2 days of volume drop. And then we have PWFL. Dave went over this yesterday, but it's the same sort of thing. Area resistance, higher lows, big move up, forms a base. MU. Now, MU's a lagger because NVIDIA is the leader. So it's not really on my top list, but it's the same sort of thing. You have this run up, got this base being formed, and now it's just getting tight here on lower volume. And then you have CNX we went over. RXST. This is actually the only trend break I have on my stock watch list. So you have this move up, you have this base, breaks out of this base. Not really tradable for me, but now you see it's getting tighter, higher lows, lower highs, right around this 10-day moving average on lower volume. So this is a beautiful looking trend break, which is what I like to see. If we could see it. And then BRCC. So BRCC, big push up, same thing, tightening up, higher lows being formed, and low volume, very low volume. This is a faster mover, so be careful playing a name like this. And the only thing I don't like about it as well is look at the RS rating. It is 90. So yeah. CVLT, same sort of thing. Getting really, really tight here. Look at this volume suck up here, and then you have the move up, tight volume suck up, breakout on volume.
I like the blue skies on that one, on the CVLT. Yeah. That's blue skies. That's going to be generally one of your better base breakouts or trend breakouts, guys, is because there is no overhead resistance, meaning there are no sellers overhead selling into this. So I really like this CVLT. I don't have it on my watch list, but I'm going to throw it on there now. So thank you for that one.
Yeah, no problem, brother. So CLVT, ELVN, not a great setup. This needs a lot more time, and it's a very low volume name, so I wouldn't even put that on. Mama, watching this, nothing too pretty here. Wouldn't really watch that. Dave went over this one yesterday. I really like this one, but it's PAHC. But yeah, same move up. You have this big move up, higher lows, getting really tight. And
that's a base on top of a base too.
Yeah.
At least that's what I'm seeing on the hourly. It looks better on the hourly.
Yeah.
But base on base, guys. That's those are the hottest ones out right now. Woo!
And then we have PRM. PRM, same thing. You have this move up, base being formed, found resistance at these all-time highs. Well, at these highs, not all-time highs, sorry. And we'll see if it can form these higher lows and tighten up. And PWP. Now, this is a little weird, but I did throw this one on here because you have this move up, you got this base being formed, and you have this massive shakeout on earnings. So this thing, someone dumped a shitload of shares, and then this thing just came right back up, and now it's right at these all-time highs. So I actually find that bearish when it has this massive shakeout. I mean, sorry, bullish when it has this massive shakeout, and then it goes up. So that's all. That is everything I have for you guys. If there's anything else you want for me to talk about, just ask away, and I can answer your questions.
Do you guys have any questions?
Feel free to ask, guys. Like, there's so much that goes into trading. It's insane.
The whole reason why we do this, guys, is so we can train our eyes. Even if you can't grab these plays, even if you don't have the cash on hand, or you're already fully invested, or whatever it may be, what you need to do is you need to have these stocks in front of you. You need to set these alerts. Adam and I, we aren't constantly flipping through watching these and waiting for them. We're waiting for an alert that is close to this strategy, that is close to that breakout. So that way, when we do get alerted, say we get 3 alerts, we choose the best one. We have them in our head. We know what's the best one. I love CELH. I love PUBM. And there was one more, PAHC, because of the double base. Those are the 3 where if 5 alerts come up, those are the 3 that I'm going to have to choose from. Those are the serious ones. So that being said, like if we train our eyes, we set our alerts, then you can sit back and relax. The only time I don't like coming to the market is if I don't feel like I did my homework like we just did tonight. Because you're not setting your alerts. You're not prepared for the market. You're not ready to zoom in on that 5-minute because you don't know what the chart looks like and you got to do all your homework then. Now's the time to do your homework, so I appreciate everybody being here tonight. We're going to give you guys just a few more minutes to see if you have any questions. You're more than welcome to throw them up in the water cooler chat or unmute yourself and ask, but I'm just going to keep on chatting while we wait for you guys if you have any questions.
I have a question.
Go for it.
So on PAHC, the resistance is 1868-ish.
Yep. Wait, 1816.
68?
1860? Yeah, I would say that. Right around there. 1860, I'd say.
1860, okay.
Yeah.
Now, when you set your alerts, do you set it right at resistance or a little bit below?
Right below.
A little bit above?
Blow.
Mine's
Because
Okay.
you
going
want
to
to
be
get
set.
alerted before it breaks out. Then you have time to react. And you're watching the stock. So if you set it below, and let's say a bunch of volume comes in, and I mean you set it above and a bunch of volume comes in, that thing's gone. Like it's gone. Now if you set it below, and it'll give you enough time to put on a trade. So
You set the alert at what, 1860 then?
I would set it at
This one you
Yeah,
need to
this
watch
one-
first thing in the morning, guys.
it's tough.
Because it's already sitting at 1855, which is a psychological round number. That 1850 has gotten broken, and then it closed at its high at the end of the day, which is showing me that in the morning, this thing might already gap up in the pre-market. And if it does that, then hey, it's gone. You know, we might wait for a pullback to retest the breakout area at 1860. But if it doesn't, and we get some nice volume first thing in the morning, that's going to be a beautiful push to the north side. So I would say screw your alert. This is going to be the first thing that you have on your watch list. First thing in the morning, you can watch that in the pre-market. If it doesn't gap down hard in the pre-market, this is what you're going to keep your eyes on first and foremost, okay?
Thank you.
I don't know. I don't really like the look of this stock, to be honest.
I don't when you zoom in that far, but if you look at the hourly, you'll have a better understanding of why I like it so much. because it is a base on top of another base.
Where's
That's
the
what I like
base?
about it. That's your
I
base
guess
for
you
the
can put it
first.
right here.
And if you look at the second one, that's going to be your second base. And then if you really want to see a nice base on top of a base, go to FSLR and you'll understand why I'm talking about this stock so much.
FSLR.
Yep. And then you'll see the base on top of the base right there. See the
Oh, you're
two
talking
bases?
about this little base on
Yep.
top of that little bit.
Yep.
Yeah.
And it's just like PAHC. Now, not the same sector. This is for solar, that's in the solar panel sector, and PAHC is in the healthcare sector. But this is what I mean. This is just the most recent example for a base on top of a base. That's why I love IBD investors play base on top of a base. I play base on top, and they're very, very structured, very well drawn strategies. So,
Wait, does my mic sound bad?
your mic sounds amazing, dude. You have a voice of an angel.
Okay, perfect. I just thought it was bad.
Taped on hordes.
All right. Is there anything else you guys want to go over? Well,
Nadayo, you want to know why I knew that institutions would come back in and buy GME? Because there's liquidity above. I expected there to be a pop on GME because when something comes down that hard, that fast, there's going to be somebody there ready to buy it up so it can pop back up and sell into the people up there waiting. So if you look at GME, why did it have that big pop up and another sell off? Well, just like it always does. We've been watching the stock market for many, many moons now. So when you get these, can you zoom out on that for me, Adam? When you get these huge pushes higher and these huge pullbacks, you're going to see when GME pops up and it comes down hard and fast, it's going to pop back up and come back down hard and fast because there's liquidity above to sell off into. So when GFE came most recently and sold off, well, when we have this big sell-off, you're going to have something pop back up and resell off into it. So we had that big push up. It sold all the way back off. And then we have yesterday's big pop. I think it was in the aftermarket, actually. It popped up all the way up, I believe, to $20. I can't remember. I'll have to look on my chart. But I don't know if it's necessarily institutional ownership, but we had a nice pop. No, that was on the hourly. So at 1600, it popped all the way back up to $24. You can see right where it ran into. It ran right into that area of resistance of $24. Psychological level, right? Ran right into $24. I'm looking on the hourly, Adam. You'll see that it popped right up into that $24 and then sold right back off, So, no, you'd have to zoom. You'd have to zoom
Liquidity,
in.
please.
Liquidity. So liquidity is so if something's liquid, it means it has a lot of liquidity. A lot of liquidity is like how many shares get traded, right? So if there's a lot of liquidity, it means that there's a price action area where a lot of people are trading this thing. So if GME sells off very hard, very fast, there's going to be someone that are there to sell off stocks. So if there's an opportunity for, let's say, a specialist or a market maker to make more money on this, they will sell off into a stock and then buy it back up at the bottom in order to push the price up back higher so more people are buying back into it and they can sell back off into them. Because people are playing with their emotions, especially with GameStop and AMC. The people get excited. So when it starts to go up, you get people that are buying those tops. That's where the specialists are selling their accumulated stocks that they bought back at 18. And they'll probably do this again until it comes all the way back down to its original price of around $10, $11. So this isn't over for GME, but I don't think it's going to. It'll never get back up higher where it was at 80. That sell-off was from the daily sell-off. So, but I didn't play any of that. I made money on the short side on GME, but I only played the one day where I felt comfortable, and then let the rest, let the short traders take care of that one.
all right. Is there any other questions? Or I might head out and.
So when a stock hits
Yeah,
an all-time high, does that mean there's no more liquidity left?
We asked that one more time.
When a stock hits its all-time high,
Yeah.
is there no longer liquidity left?
Well, where would the liquidity be then? If we're at an all-time high, there would be liquidity below us, right?
Okay.
And a lot of time people buy all-time highs. So if it's a liquid stock, there's liquidity. But when I say they're trying to run it up because there is liquidity, it means that there's somebody holding stocks at an area. So they know that there's going to be liquidity at a certain price level. So if we look at the volume weighted average price, you'll understand liquidity a little better because there'll be trapped liquidity, meaning people bought at a certain price. So for example, GME, its last run up, its average daily price was at $52. That's where the trapped liquidity is on that daily because it ran all the way up on 514. The average price that was bought was at $52. So there is trapped liquidity there at $52. So they might run it back up to 52, but I doubt it'll ever go back up and reach that $80 height ever again. So it might run all the way back up to $52, but that's where it's going to find the liquidity that's trapped and it's going to sell back off. So that's what I mean by that.
So is that like a bag holder? Is that same thing?
Yes, that is the exact same thing. A bag holder is holding liquidity or holding shares to sell.
Yeah.
Gotcha.
Okay.
What do you think?
Predator, what you got?
So your presentation was great, Adam.
Thanks,
I
brother.
think everything went pretty smooth. The only thing I think that you probably could have focused a little bit more on, just to make it real clear to people when you were talking about the breakouts, were the stops. I don't recall hearing a lot about the stops. I heard you mention it once or twice, but I don't think you actually went over what the stop is and the process of putting one in play and why to put it in play.
Yeah, I can run that through real quick. So a stop, let me go to just my cells. Let's just grab a random stock here. So stop, pretty simple. First thing I do is just grab it. If I buy it on this day, I set low a day. I'm setting my stop at low a day. Now, how do I calculate? So is your question like where I set my stop, or how do I calculate how much shares I'm going to take? And like, what do you? Because setting the stop's easy. It's just low a day. Like I just set every breakout I take is low a day. So.
And why do you set it for low a day?
So low a day, it's just a psychological area, and if it comes down, because my goal for being a breakout trader is that if it comes down and below the low a day, I'm wrong. Like I'm wrong, and I should just be out of the trade right away. Because right when I buy, I want to see this thing rip. And
we are momentum traders.
Yeah, you're playing the momentum, you're finding where the least amount of supply is coming into the market and then where the demand, right where the demand is. It's timing. So if it comes down, hits low a day, then I was wrong and I'm out, So it's just you want to pinpoint the time where when you're right, you want to see it rip, pretty much.
How do you have a low a day when it rips, right at the bell and opens up, bell dings, it rips.
That's where the little, sorry for interrupting, but that's where the little kind of you gotta mess with your strategy a bit. Usually when that happens, I set for previous low a day because I like to give the stock a little bit of time to breathe, just a little bit more time to breathe. So like ASPN's a great example. I actually set my stop low a day at previous day, as you can see, because it ripped right in the morning. Now I could have set it low a day, but since it was so tight and it was still within its ADR, I set previous low a day. So yeah, it's all you'll find as you trade. You'll have this basic strategy, but then you have the basic strategy, and then you got to find certain ways, situational plays that you also or rules you have to make. But it's just little tweaks on the side and stuff like that But yeah, that's how I
Now,
set a stop.
are you depending on an automatic stop so it sells you out automatically without your your personal intervention,
Yep.
or are you mentally doing that?
No, auto stop, bro. Like
Okay.
I've had times, yeah, I've had times where I haven't set a stop and it blows through my stop and then it comes back and I'm like, nice, made money. But I consider that a bad trade. Like that's a bad trade because you should be
Yep.
out of that and you broke your rules.
Right.
Now, it's always as soon as I put on a trade, always stop, boom, stop it, and I walk away.
You can always get
And then
back
I
in
let the
too.
trade work. Yeah.
That's the great thing about stops. If it stops you out, guys, that doesn't mean the trade's over. That means you were wrong on that trade. And if it comes right back up like CENX, we're ready to get back into it. But we were wrong on the first breakout. Even though we made money, we sold out where we were supposed to at our break even. It broke well through that break even price, then came right back up. Now we're ready to take it again. But we stayed true to our process.
Well, CNX, we were right on this. I think this was a great trade, like a great trade. You have a base, you have a breakout here on volume drop on volume, breakout of this area resistance, and then it rips and then it pulls back. And if you played it perfectly, which we did, you sell it at 2R,
sure,
half at 2R, move your stop to break even. I don't think this was a loser. I think this was a winner.
Well, it was a winner, but if we're momentum traders, we lost momentum on the trade. We were wrong on the trade. We were allowed to make money on a trade that we were wrong on. So even though we made money, we were wrong on the breakout. It didn't break out. That was only a day mover. It only came up 180R, or no, it came up 380R, right? We're looking for 5, 10, 20 ADR. So I will say it this way, according to what I wanted to happen with CENX, I was wrong on the trade. We did not get a momentum breakout. It broke out, but we did not see that momentum. So then we had to stop out. We had to stop out of that trade at the break-even price. So even though we made money, to me, I was still wrong. Now, I was right in my process, but the breakout, the momentum showed me that this stock isn't ready yet and it needs more time.
Well, you can't control that.
No, we can't. We absolutely can't.
So
well, you can with the stop, with your stop. Yeah, exactly.
Yeah, so in my opinion, I would consider this a good trade. Others, but yeah. Any other questions, guys? Like open floor. Oh,
will you sing me a lullaby to sleep?
Yeah, I got you.
All right, guys, we used up all of our time here. I just want to say thank you, Adam. You're awesome, dude. You always bring us a great breakout watch list. I've taken many trades from your breakout watch list. I love the process that we have and that we've had together for quite some time. I hope you guys learned a lot from this. We will definitely be doing this more with Adam on Mondays. So if you like Adam's strategies, you want to train your eye on these trend breakouts, or I'm sorry, the base breakouts, make sure you show up here on Mondays. He's going to be taking care of these for me. But if not, regardless, we're going to be here on Tuesday, Wednesday, Thursday, Friday. We won't be here, or Saturday, but then of course Sunday we'll be right back. So make sure you guys hit that like, hit that subscribe button, join the Discord so you can be here with us. And Adam, you're awesome. Thank you so much.